Hey everybody, Robin Hart with your weekly market watch for August 14th. We finally have a little bit of good news for buyers. Rates are improving, buyers have more leverage, and this market may be creating some opportunities nobody seems very excited about yet. But guess what? Let's go. Let's dive into it. So there's a lot of economic noise right now. So today, forget the headlines. We're looking at signals underneath them and what they actually mean for buyers and homeowners. First, the headline news. Everybody wants rates move lower. Now, the 30-year fixed average dropped to about 6.69%, with FHA and VA also slightly improving. Now, is that 3%? Nope. But I'm a loan officer, not a magician. But lower rates do mean improved payments and more buying power, and that actually does matter. So why are rates finally getting some rate relief? Well, we have a few reasons. Softer inflation, slower job growth, lower treasury yields, and some easing in oil, except for today at the gas pumps. So remember, mortgage rates don't have to wait for the Fed to officially cut rates. The bond market moves ahead of the Fed. Translation, okay, the market may be starting to smell rate relief before the Fed actually serves dinner. Now, here's the messy part. Jobs are actually weakening. Inflation is easing, but it's still sticky. Oil and fuel remain volatile and elevated. And then there's what I call the shadow data. Now, what we're actually seeing in individual transactions, contract cancellations are running around 13.7%, and even pending home sales have weakened. But that's not necessarily bad news for buyers. That's actually negotiating power. And here's where I think things get a little interesting. You see, when stocks fall, investors, they say maybe there's an opportunity. But when housing slows down, everybody seems to run for the hills, screaming, run. Now, today we've got lower rates, more inventory, less competition, and sellers who may actually negotiate, whereas a couple of years ago, they wouldn't negotiate on anything. Now, I'm not saying blindly buy a house. I'm actually saying the opposite. I'm saying don't confuse an uncomfortable market with a bad opportunity. See, sometimes the best buys happen when everybody else is nervous. Same things happen with stocks. And here's Hart's meme of the week. I do have to like to have a good time. You don't have to pay a mortgage if you don't buy a house. That's actually technically true. Of course, if you're renting, you're probably helping somebody else pay their mortgage. And if you're living for free, well, guess what? Yeah, well, that's a whole nother story. But the point is that the point isn't that everyone should buy today. It's that long-term ownership can turn a housing payment into an asset instead of simply an expense. So what's the takeaway here? Don't buy because somebody tells you that rates are going to go up, and don't wait because somebody tells you they're going to go down. Run your own numbers, your income, your payment, your assets, your goals, your timeline. The right strategy matters a whole lot more than somebody else's prediction. Now, I've been doing this for 26 years, and complicated markets are actually where experience matters most. My job isn't to sell you a mortgage, it's to help you figure out whether the numbers make sense and then find the right financing when they do. And if you're interested in buying, refinancing, or investing, or you're just wondering whether this market has finally corrected and created an opportunity for you, give me a call. I'm Robin Hart with the CMG Home Loans team. Build smart, build wealth, and go enjoy the good life. I'll see you next week.